Welcome back to the channel, everyone. If you're an active or retired member of the US military or a spouse of one, this video is for you. Now, you may have automatically assumed you would need or should use a VA loan to buy your next home, but it's important for you to know that isn't necessarily the case. Today, I'm going to break down the pros and cons of VA loans so you know if this type of loan is right for you. As a 21-year retired Air Force veteran myself, I specialize in working with veteran and military clients. I'm Joe Nelson of the Nelson Home Group, Kansas City's highest rated real estate team on Google. I'm also a licensed mortgage loan originator. Let's jump into the world of VA loans. A VA loan is a loan that's backed by the U.S. Department of Veteran Affairs to help veterans, service members, and their spouses become homeowners. Because the federal government backs this loan, it also decides on the rules and benefits. This itself can be both a pro or a con depending on your individual needs. There are certain benefits that apply across the board regardless of the lender that you choose to go through. But it also means lenders aren't able to be as flexible during the qualification process to get you through to the closing table when unique circumstances arise, since certain criteria have to be met to receive the VA guarantee. We'll touch on this a bit more later. The most well-known benefit of a VA loan is that it can provide 100% financing. That means no down payment for your loan. Now, if you have the ability to put money down on your VA loan, you can still choose to do that, and you might want to do it in order to take advantage of some other benefits it offers. But for those with limited cash available, VA loans take this potential hurdle off the track. This lets those who have smaller savings but do have the ability to afford monthly payments still reap the benefit of homeownership. I know personally I've used the VA loan more than once, and the very first time I used this benefit, I chose to take advantage of the 100% financing. An incredible benefit for young first-time buyers especially, but really for anyone who would prefer to keep their cash liquid or invested elsewhere. One of the biggest reasons you might choose to go with a VA loan is because of the month-to-month affordability it provides. Interest rates are almost always significantly better than conventional rates, almost always, and VA loans do not require PMI. That's private mortgage insurance. More to come on that in a minute. So, your monthly payment with a VA loan tends to be less than a conventional loan, which allows you to either buy more house for the same payment or choose the same house and save money in your monthly budget for other things. Okay, let's circle back to that phrase, PMI. Most lenders require you to pay for PMI when you're putting less than 20% down, which protects the bank if you default on the loan and are upside down on the house due to the lack of equity or downward trending market conditions for some reason, or even how you leave the property and what kind of condition it is. On a conventional loan, you pay PMI with your mortgage payment until at least 20% of the principal has been paid. Side note though, on an FHA loan, PMI is called MPI, which you usually have both an upfront fee of 1.75% and a monthly fee. With FHA, this is regardless of your down payment amount and sticks with the loan for the life of that loan. However, with a VA loan, you don't have to pay for private mortgage insurance to reap the benefits of 100% financing. It's a huge benefit for veterans. You do, however, have to pay a funding fee. And this can be a drawback to VA loans. The funding fee is determined by prior use of a VA loan and how much money you're putting down, if any. It's paid up front and it's usually just added to the loan amount and financed over the life of the loan. For example, if your funding fee is 2.51% for your first use and you buy a $300,000 house with zero down, your loan amount will actually be $306,450. So technically, you'll be upside down on the house when you first move into it. This is something many veterans are not aware of. While the payments month to month will certainly be less, it's still an added expense that you potentially have for the next 30 years or will be included in your payoff when you refi or sell the property. You can check out this handy dandy chart here to get an idea of what your fee will be or what percentage and how much. Don't panic. This can still be a great option as home values generally appreciate over time. So as long as you'll be in the house a few years, you'll likely be fine. but it is something to be aware of and consider your option. There are also ways to reduce this fee. If you put a down payment on your VA loan, this can cut the cost and reduce your monthly payment, but it will not get rid of the funding fee entirely. That said, this fee will be waived if you receive 10% or more in disability from the VA, a massive benefit for our disabled veterans. And if you have the ability to put money down to reduce the fee or qualify for this waiver, this loan type can save you quite a bit in extra fees over the years. Make sure it fits with your circumstances. Another potential drawback to a VA loan is that the requirements for the house itself are a little stricter. In order to pass through underwriting, the house has to appraise with the VA's minimum property requirements. The purpose of these requirements is to make sure that veterans and their spouses are purchasing livable homes that are not going to break the bank to maintain. There's special scrutiny on electrical and plumbing, roofs, basements, even peeling paint or wood rot and foundations. They also look at safety issues like stairs without handrails or offset concrete causing tripping hazards. This means if you're looking to put some elbow grease into a fixer-upper, it may not pass the appraisal requirements for a VA loan. If you're looking for an older home that you want to update yourself, a VA loan may not be the best choice for you. The other drawback for VA loans with these stricter appraisals is that sellers tend to get nervous about accepting your offer. It's not that they're anti-veteran. Especially in multiple offer situations, it can be very difficult to compete against other loan types because sellers don't want to have to make costly repairs for your loan, or they are also concerned about the appraisal value coming back where it needs to be for the contract price, because VA appraisals also have valuation stigmas. Ultimately, if you're choosing between VA and conventional loans, you need to make sure that the math works out in your favor. Think about how long you plan to be in the house you're buying. If you're only going to be there for a couple years, you may save money in the long run by opting for a PMI payment over a funding fee and going the conventional route. Also, consider the interest rates. While rates are usually lower with VA-backed loans, that's not a guarantee, and that comparison really only works when you're putting a down payment on the loan. If you have to have 100% financing, VA is the way to go. It also heavily relies on your credit score and debt-to-income ratio. VA loans aren't one size fits all any more than its conventional counterpart. This is why it's essential to work closely with your lender and shop both VA and conventional loans. Your lender should walk you through all of these points and do the calculations for you, explaining to you what each cost is and how they arrived at their percentages in a way that's clear and understanding for you. I always recommend using a trusted local lender over big chain lenders like the ones you see advertised on TV. Believe it or not, those lenders aren't necessarily associated with the US military, even though they're often advertised as a benefit being offered through them. There's a huge misunderstanding there amongst veterans. They are for-profit companies who tend to have higher closing costs and less experienced loan originators who work on salary, which means they have no vested interest in getting your loan closed and on time. Instead, I recommend choosing someone local who your friends, family, and real estate agent can vouch for through experience time and time again with easy and open communication. You'll be far more likely to have a stress-free and successful closing experience. And that wraps it up for today. If you're interested in seeing what you qualify for and which loan program is right for you, the link to my loan application will be in the description box below. Don't hesitate to text or call me for your pre-approval or to start your home search. Make sure, please like this video and subscribe to our channel for more Kansas City lifestyle and real estate videos. We post a new video every Friday. If you'd like to put KC's #1 marketing plan to work for you, call or text me today. My number is on the screen and in the description box below. Let my team be your Kansas City real estate experts. See you next time.